Alright, good day once again to traders out there. How you all doing? I'm sure you guys are having a great day and an amazing moment. You're welcome back once again to the Bztex Global YouTube channel. So if you're new on the channel, we share crypto related matters, breakdown analysis on the latest information about the current event going on in the market. So you want to make sure you subscribe, turn on the notification bell so that you actually can be the first to get notified whenever new videos are actually being uploaded to the channel. So today, without wasting further time, let's dive into the teachings of today. All right, so basically today we're going to be discussing about market structure. We're going to be discussing about market structure. No, that was not good enough. Okay, let's just forget about it. So we're going to be discussing about the market structure. All right. So when we're thinking about market structure, basically what are we talking about? We're just talking about the movement of the market from one point to the other, or probably how the market is actually moving. So basically that is what we mean by market structure. So how the market is actually moving, market structure. Okay, so the structure in which the market is moving. As we all know, we have majorly two phases of market. All right, we have the bullish market and we have the bearish market. And the bullish market in the sense that the market is actually trending to the upside, while the bearish market in the sense that the market is trending to the downside. And also, I know you would agree with me that we also have one more, which is what? The consolidating market, whereby the market is actually moving sideways. It's not going up, it's not going down, it's just moving in what direction? It's just moving in a sideways direction, in a regular pattern or something in the sideways direction. Okay, so basically that is what the type of, the phase of market that we're having, or how the market actually moves. But one thing what we want to consider today is both the market structure for the uptrend, which is the bullish market, and market structure for the downtrend, which is the bearish market structure. All right. So when we're thinking about market structure, what is the first thing? Just take a moment and think about it. What is the first thing that comes on your mind? Okay, let's actually go to this part of the chart and let's see what market structure actually looks like um on a diagram. Okay, and this is meant to be this right here. Okay, so let's say for example we're actually having a trend of the market to the upside, whereby we are creating, what are we creating? I don't know, do you know? All right, we're creating series of higher highs and we're creating series of higher lows. Now in the process, or in turn of we having higher highs and higher lows, this is what market structure is what all about. Okay, so we're creating highs and we're creating lows in the market. So we're creating higher highs, higher lows in the market. So when I have a market structure, I'm talking about me having higher highs. No, I want it to be capital higher highs in the market, and I'm also having what? Higher lows in the market. Now I know a lot of you are actually going to be wondering, if you actually do not have the basic knowledge before now, you actually be wondering, why is it called a higher high, or why is it called a higher low? Now look at this eye right here. If we are moving from this point, from this eye to the next eye right here, we're going to be referring to this as a higher high. Why? Because it is higher than the previous eye in the market. As simple as that, isn't it? So, and the same thing with the lower low. You'll find out that it is lower, it's higher actually than these, but it's actually a low. Okay, it's a low coming from the eye. It forms a low, goes up, forms a high, comes down, forms a low. But the truth, the truth is still that it's actually, even though it's a low, but it's actually higher than this low, right? So we call it a higher low, and the process continues like that and like that. So you have the higher high, you have the higher low, you have the higher high, you have the higher low. All right. And if we're having a bearish market, we can also look at the same thing for a bearish market. So let's take, for example, this is our bearish market. Okay, we are having this to be our bearish market, whereby the market is actually trending to the downside. Now, what are we creating in this kind of scenario? We are creating the lower low and what? The lower high. and we're going to get down to the breakdown of that in a bit. Now, when we're creating the lower low and the lower high, we have this to be the lower low, and we have this area of the market to actually be the lower high. Now, I know the question again might be, why is it actually, why do you actually call it the lower high or the lower low or whatever, you know? So basically, when we look at this, when we move from this level to this point, from this point to this point, you will find out that this low, this is actually a high, right? Even though it's in the downward direction, but it's actually a high. This is the low, this is the high, this is the low right here, this is the high. So now we're forming a new high, but the truth will mean that this high is actually low compared to this high right here. Okay, so that's why we give it the name lower high. Yeah, it's a high, but it's actually low compared to the previous low. And when we look at it in terms of the lower low again, we're still going to be having something similar. You can see that we're still having something right here, which is the lower low. Okay, this is actually a low, and it's still lower than this particular low right here. And that is just basically what we're talking about. All right, so we're having a lower low in the market, and the process continues like that. And no, that was a mistake. And the process continues like that and like that. So we're having a series of higher highs and higher lows, and that is just how the market structure is formed. So when you look at the bearish market, we have, sorry, the bullish market, we have something like this in the sense of higher highs and higher lows. And when we look at the bearish market, we're having the lower highs and the lower lows. So technically, if you want to put everything together, you just say we have, for the bullish market, we have the higher highs, and we also have what? We also have, no, and we also have the higher low. And for a bearish market, we have the lower high, and we also have what? We also have the lower low. And technically, this is all that is all about. So now let's jump straight into the chart, and let's just see an example of a higher high, higher low, lower low, and the likes. Now, looking at this particular chart, which is the Ethereum chart, we can see that on this particular chart, we are having a series of higher highs and higher lows. Let's take a look at it from this point. We had a high right here, okay? We had a low here. We had a new high formed. We had a new low formed. You can see it's actually went down through this one a bit. And then we had a new high form, and then we had a new low form. And the process actually continues. You can see that this young man right here formed a new high, and we are forming a new low again around this area. So if we are actually to draw what now? We're actually to draw this, maybe a line to actually connect them. We're going to be doing something like this. Now, I'm actually drawing this line in the sense that I don't want you to have the notion that it's actually going to be so straight and so perfect like what I actually used in the diagram for the example that I actually gave, okay? So it's actually would be rough at times, but you need to know how you can actually spot all this in the market, all right? So this is the higher high right here, the higher high, and this is the lower high right here, the lower high, and that is it, okay? And you will find out that the process is going to continue the same way, but you're having a high. No, sorry, this is meant to be a higher low. I'm sorry, this is meant to be a higher low, okay, because it's a bearish market. Now, don't actually make that mistake. Make sure that you do not make that mistake. And this is a lower low. Remember, it's a bearish market, and we have that of the bearish market and that of the bullish market. In case you don't get that, you can actually play back maybe about 2 minutes thereabout, and you actually get where I actually explained and I differentiate the one that is actually for bearish and the one that is actually for the bullish market. Okay, now having an understanding of this, if you also look at this part of the chart, we can also see that we're having what? We're having a few movement in the market. We can see we have our high, our low, our high, the low, the high, the low. Okay, I can say this area is the high, this area is low, this is high, this is low, and then we had, you know, it continues like that and like that. So if we'll label, we'll find out that this is a high, a low. This is actually forming more like equal top. Some people call it double tops, but we've actually not gotten there on this channel. So if you know you actually want us to do that, make sure you leave the comment down in the comment section, and we'll put it into consideration. So you're going to be the first on the list. Isn't that amazing? So Moving forward, we have the higher highs, the higher lows, for what? For the trend to the what? Upside. Okay. Now, to wrap it up, there's something I quickly want to bring our attention to, which is very, very important. All right. Let's say, for example, we're actually having a trend where a market structure, a market is actually displaying its structure on a higher time frame. Let's say, for example, the daily time frame. So I'm having this kind of structure on the daily time frame. Now, if I'm having this kind of structure on the daily time frame, now I can actually call this the external structure. Why? Or some people call it, the major structure and the minor structure. But you can also call it the external structure and the internal structure. The reason, because this area right here, from this point right here up to this point, there is another market structure taking place inside of this candlestick on a lower time frame. Okay. For example, we look on the 1 hour time frame and we see something like this, and we're scaling down to what? Maybe a 1 hour with 15-minute time frame. We're going to be seeing something of what? This nature right there. You understand? And that doesn't mean it's wrong, because this is still a new high, this is a new low, this is a new higher high, this is a higher low, this is a higher high, this is a higher low. So you will notice that the structure of the market is still being respected. And that's just basically it. Okay. And the same thing goes for a market that is actually trending what? To the downside. The only difference is going to be that instead of you talking about higher highs, okay, now this time around you're going to be talking about higher what? Lows in the market. So this is what you're going to be talking about this time around in the market. So sorry, did I say higher lows? No, instead of it, you're going to be talking about, this is for the bullish, okay, and the bearish is now going to be having the lower high, all right, and the lower low. So this right here is what? For the bearish market. So, and that is it. So I'm actually going to show you an example of this in the market. Let's see if we can actually get something similar like this in the market. Okay, so let me just go down to a higher time frame, which is more like the daily time frame, and we'll scale down. Or let me use the 4-hour time frame, and then from the 4-hour time frame we're going to scale down to a much lower time frame. All right, so now if I'm actually going to just draw this, I'm actually going to say, all right, from this point I have a low, I have a high, oh no, sorry, I have a low, I have a high right here, I have a low, I have a high, I have a low, I have a high, I have a low. Let me stop right there. Now, if you look in between this position, this leg to this point, this point to this point, this point to this point, if we are scaling down to a lower time frame, there's going to be an increase, you understand, in the market structure that we're having inside of where? This one, or inside of what? This one, or inside of what? This one. It all depends. All right, let's quickly take one as an example. Okay, let's take this one for an example, and let's go down to a lower time frame and see the market structure we're having inside of this place. Remember, this is an external market structure, you understand, so you can see everything going on the internal, or you can actually, like I said, you can actually call it the external, no, not external, now the major structure. Yeah, and we can scale down to see the minor structure inside of it. So let's scale down to, let's say, the 30-minute time frame, or probably the 45. Okay, I think the 30 is going to be good, and let's search for that particular file. I just hope you're able to see. Okay, we're definitely seeing it. Now if you check on the 30-minute time frame, okay, we actually having a full load. It's not actually loading completely, but let's just make use of what we have. All right, let's make use of what we have. That is one thing. Even if you want to be a good trader, you just have to make use of what you have. Okay, sometimes everything is not going to be there perfectly for you. All right, it's one of the reasons why a lot of traders fail, because everything isn't going to be placed there perfectly for you, you understand. So you have to think your way around it and make money and be successful. All right, so you can see how we had this movement. We had a new high right here, we had a new low, we had another new high, and we printed a new lows that actually did not break the previous low until we actually had a break in the structure. Okay, so, and that is simply what all this area is all about. So when you are seeing market structure, you should have an understanding now of what market structure is all a bow. Okay, you can see this kind of market. It created this high, it's created the low, it's created a high, it's created a low, you know, forming a double top, sort of a double top here, and then we had the continuation, and on and on and on and on and on. So basically that is all for today. I'm sure that you guys actually have got one or two things, and if you know you aren't clear enough, you can leave a comment down in the comment section, and we're going to actually make sure we're putting our best effort to make sure that we bring it to you on a level that you all, everyone, I mean, can understand. Even a primary school kid can actually, you know, get and understand what we're talking about. All right, so thank you very much once again. That's going to be all for today, and until next time, make sure you take care. Bye for now.